Dojo Live. Today, Wednesday, the 27th of March, 2019, where we talk about the future directly from those who are creating it. My name is Kim Blantis. I'm broadcasting live from one of Nearsoft's offices in Hermosillo, Sonora, Mexico. Joining me are two of my teammates, the regulars here, Carlos Ponce and Tulio Saragusa. Hi, guys.
Hey, good afternoon.
Good afternoon. So today we're going to be discussing cryptocurrency and more specifically, the business value of blockchain. Here to tell us more about this is Scott Mairs, the CEO of Blockchain Business Solutions. Welcome to Dojo Live, Scott.
Glad to be here.
Perfect. Thank you. So Scott, to get us going today, why don't you please share us a bit more about yourself as well as your background?
Sure. So I started my undergrad graduation with Citibank's executive training program. So I had the pleasure of doing a 4-year program with them in technology and opening Citicorp's technology center for object-oriented and advanced technologies. So I had an opportunity to really get some great fundamental training. Got to work on projects like a global customer server, replacing our general ledger, supporting the European monetary unit implementation across Europe. So really got involved with currency and governance and global trading, because I did a big project as well around global trade finance early on in my career. So really hardcore technology, and I've helped now 5 companies go through exits to EMC and Accenture and another number of other companies, and also done a lot of work in merger and acquisitions with Bowman's Bank and Barnett Bank and Nations Bank and Bank of America. So long background in fintech, started hardcore technology, got a master's in project management, and then my MBA in international business.
So you're like the currency guy.
Yeah, started with fiat currencies and graduated to now a lot of work in blockchain.
All right, perfect. We have to come up with a cool nickname for you, I think. So let's talk
Sounds like a
specific.
rock star to me.
I know. Do you have a nickname out there? I mean, if you do, please share.
None that I can share online.
Sure you can. We're pretty relaxed here at Nearsoft.
I see you went to Baylor. Awesome. Okay.
Yeah, I did my graduate work in their executive MBA program, and really fantastic program.
Perfect.
All
Well,
right.
Thank you for your time today. But let's move on then to more specifically your current business, which is Blockchain Business Solutions. So what is your product and what problem are you solving?
Yeah, at Blockchain Business Solutions, we do a lot of work with the business side of blockchain. So I'm advising a security token offering company that's tying their Bitcoin, not their Bitcoin, their blockchain solution to mining assets, so asset-backed tokens to mines in Peru and also oil and gas assets. And then advising another company who is raising money in Europe for US real estate investment, also using security tokens. Working with drone companies that are using IoT and blockchain to help first responders get drones over sites before the vehicles can even get there, so the commanders on the first responders can see the site before they even arrive and know what equipment they need, know how to get there safely, and whether they need backups, whether there's people stranded, can test for toxic gases. So a lot of really exciting things happening in technology right now that are really improving the future and the quality of our lives.
Very interesting. Congratulations. We could probably talk on and on about those. We actually had to talk about some drone technology a while back. It was really, really interesting, but we don't want to diverge too much. So before we continue more in this conversation today, I have to admit that I myself, I'm pretty clueless when it comes to cryptocurrency, blockchain, or anything like that. And I know we've had a couple talks about this theme already on Dojo Live, but for those people, those viewers who are like me, clueless but curious, and haven't had the opportunity to watch the other videos yet, can you quickly just give us this cryptocurrency for dummies kind of introduction?
Yeah, I really think about blockchain in 3 areas. So the original use case is cryptocurrency, developed by Satoshi Nakamoto, originally to supersede our current banking structure to allow global payments, low-cost global payments anywhere in the world. And so that was really what the foundational technology for Bitcoin. Since then, there's been Ethereum and other altcoins. Now there's over 2,000 created of different types of coins with different types of underlying technologies, but all built on the original Bitcoin technology stack. Then I think about it in terms of the blockchain technology itself being able to be used for an alternative investment vehicle. So we talked about security token offerings. ICOs were big for a while and have kind of been squashed now because of regulatory issues. But security tokens are still alive and well. And then there's utility tokens, which are either fungible or non-fungible, which is a fancy word of saying they're either all the same or they're all different. So a non-fungible token is a unique asset that has unique qualities and typically associated with a serial number. So a baseball card, right? A one-of-one baseball card or a one-of-one art piece is a non-fungible token. And a fungible token would be something like coins. So any coin that's identical can have the same value, and it really doesn't matter what number they are. And they're minted as a pool, and you can interchange them. So that's really the fancy name for fungible and non-fungible tokens. So the business value, the utility value, the finance value, and then obviously the cryptocurrency that most people know about, which is Bitcoin.
Right. So before we move on, I think we've got some questions coming in from some of our viewers. But before we do that, let's quickly talk about the benefits then. What's the benefit of cryptocurrency?
I'd say the real big benefit is to disintermediate trusted advisors. So you're able to essentially do point-to-point payments without having to go through a PayPal or go through a financial institution. That was really the original use case for Bitcoin. And then you get into other usability, such as, gaming is a really popular one right now. So let's say, and with esports, you have the world championship sword that was used to strike the final blow, right, in the world championship of esports. That sword now you can put on the blockchain, right, and now you can sell it on these open marketplaces like OpenSea and Akomi and all these other marketplaces that have been stood up for. Most of those are built on a standard called, it's an Ethereum standard called ERC 721, which is a unique deed of trust that you can associate and tie to any digital, physical, or what we call hybrid products. So you've got a lot of things that are going on right now that are creating new types of businesses and new types of digital assets that weren't possible before because the requirement of a third party to manage authenticity, manage chain of custody, and now with especially the collectibles industry, we're able to do that with certainty now and open on the public on a blockchain that anyone can track and monitor and see its current ownership and its whole history of every transaction that has taken place. So who all owned it in the past. It's a very fascinating thing in the world of trading and the world of
It is fascinating. It makes me laugh because I remember several years ago, if you watched The Big Bang Theory at all, there was that episode where like Sheldon's weapons or something get like stolen and he goes to get them back. So that's now becoming like a real, like a monetized element.
Scott,
yeah, absolutely. And the interesting thing is, right now, all these billions of dollars are being spent on these games like Clash of Clans and Clash Royale, but as soon as that publisher turns that game off, all of your investment is gone.
Right.
My son actually played a game launched by Disney called Toontown, and hundreds of thousands of kids all over the world played this game called Toontown. It was a safe environment for people to play simultaneously with characters and become a cartoon. Very, very famous title. Well, Disney shut it off one day and started to refocus their investments on Club Penguin and shut down Toontown. Well, there was a huge uproar, and all these kids that invested this time and money and built their characters and their worlds out, all of it went away. My son was a big player in that game, so he called me one day and said, "Hey, Dad, CNN just called, and they want to interview me, and I need my parents' permission because they want to talk about the impact of this game shutting down by Disney." And what happened was a group of people got together and decompiled and rebuilt the code from scratch and relaunched it as Toontown Rewritten.
Wow.
And so now there's still thousands of kids playing it, and Disney is sort of quietly allowing it to happen as long as it follows within the guidelines that they developed. And he's become a Twitch partner and a Discord partner, and he's doing some cool things with it all around the gaming world that became possible. And they're not using blockchain, but that was the reason why all this time and effort and Discord and all these other games that are being launched right now. If you invest all this money and they shut it down, you've lost your entire investment. So now if you can take that forward or bring a sword from one game into the next game, and a future upgrade or a new title, or you can just own this as a collectible. It's a fascinating new entire ecosystem around digital assets.
Hey, Scott, I have a question. I'm actually really curious. You mentioned a few projects you're working on, some amazing companies. I like the emergency responder technology. Why would I want to raise capital through a cryptocurrency versus the traditional method? What's the pros of doing that? And what are the challenges around that? What are you seeing?
There's a couple of things. So early on, the ICO world was, I don't have to deal with the SEC, right? I mean, quite frankly, getting a listed product, going through an IPO process, very expensive, lots of regulations, lots of ways you can mess up. So essentially it was crowdfunding on steroids, right? So anybody could buy coins at any level that previously weren't accessible. So you're opening up your business to new markets. You're opening up your business to new investors that maybe wouldn't qualify or weren't savvy enough or aren't, certified investors. So that vehicle allowed you to avoid a lot of the red tape. Now the SEC's ruled in other countries, and they're shutting down businesses that went that way, that did these security offerings through an ICO that didn't follow the rules. And so a lot of those companies have been shut down. So you're seeing the ICO market sort of peak 24 months ago, maybe 18 months ago, and now almost completely shut down because now there's regulations they have to comply with. And when they go through those processes, in some cases, it's almost less taxing right now to do that offering than to go back to the traditional way. So what we're seeing, unfortunately, in the U.S. marketplace is that other countries like Malta and Isle of Mons and these Estonia are standing up government-friendly environments that allow you to launch your ICO or your security token offering with a set of regulations that are better defined so you can stay out of trouble. But then in both cases of the ones I'm advising right now, they're not coming into the U.S. to allow U.S. investors to invest in them because the SEC requirements are so daunting. And so they're opening them up in these other locations, in Cayman for one, and then Isle of Mons for another, and then offering them to the global communities for investments, which gets them access to investors and money that they wouldn't otherwise have. And it's a very elegant way to track ownership of the securities on a blockchain because it's completely visible and transparent, and you can guarantee they're not double spending or double selling those particular securities, and everybody can see it all the time, anytime they want to. And so there's a lot of really benefits to using that technology. The regulators just haven't caught up to it in a lot of cases, and I think we'll see that change over time. And until then, the countries that get ahead of it and get clear regulations, like Malta and Isle of Mons, are getting business that they never would have gotten before and becoming global centers of commerce by being smart around the regulations.
Do you think, though, that impacted things like the ability to do OPOs now, where you don't have to be an institutional investor to do a crowdsourcing funding campaign? You think that had an impact on some of that regulation, or is that just a way to combat this issue through the traditional method?
Yeah, I think a lot of those went through traditional, private placement memorandums, right, for initial funding, angel funding, Series A, and then as you go to larger and larger raises of funding, then there's different restrictions on how you sell and market your securities, and there's different regulations as far as accredited investors and things that need to come into those investment pools. And crowdfunding is a great option. It's been around for microfinancing for a long time, and just moving up to bigger and bigger pools. And so there's regulations around those too. There's thresholds as far as what you can raise on a crowdfunding before you have to then register it as securities in the Security Exchange Commission. So I don't think they really necessarily, I think they're independent movements, and they're regulated separately. But I do think that, you know, participation in markets as a you know, lower economic tier than just, you know, the rich getting richer, right? You know, it's the whole Robin Hood thing. Is how can the common person participate in higher return investments, right? Especially from a risk rated return perspective. And right now, only the high wealth can get into some of those deals because of the risk profiles. And so this does open some of those up. Unfortunately, it also opens up the bad actors we've seen, right? In fact, there was an article today on MSNBC and it's talking about that, you know, a lot of the coin offerings and even a lot of the exchanges are fake coin offerings and fake exchanges. A lot of people set up fake mining pools, and, you know, it's sort of investor beware, because anytime there's new money coming into any new investment instrument, you're going to get people pretending to have those instruments and take your money and run, either setting up Ponzi schemes or just completely taking pictures of somebody else's mining farm or their assets and setting up a pretty website, and you put your money in and it goes into a black hole and they put it in their bank and they disappear. So, you know, you really need to do your due diligence on this space. And that's really where the governments are having, and the SEC has so much heartburn, is that there's so many bad actors, you know, they're trying to protect, you know, but in protecting, it requires regulation and barriers. And so it's this balance that we have in our free society between, you know, freedom and protection.
Kim, I'm going to pass it back to you for some of the audience question, but I have one more question. You earlier mentioned how some cryptocurrency or coins are actually being backed by natural resources, minerals, etc. I mean, money used to be backed by gold and silver. It's like back in the day, right? Is that one of the trends on how they can legitimize coins? Is that something that you're seeing as a possible trend long term, where there's a backing that's actually tied to some natural resource that has value? Or is that just something that they're doing that's unique?
Yeah, well, the U.S. monetary system used to be backed on the gold standard, right? But if you look at the total subscription of gold instruments in the world, it's multiple times the actual gold that there is in the world. So, you know, there's really not a true gold standard anymore. So it's still perceived value based on some relative notion of backed value.
It's an
the nice thing about some of these new offerings is they're actually backed, right, by either, you know, natural resources in the ground, oil and gas in the ground, or in some cases it's those products in transit, right? So they're essentially able to, in fact, here's an interesting one. So in Wyoming, a recent hackathon resulted in a business model being developed to tie tokens to cattle, right? And so one of the challenges with cattle is that you can grow these high-end Angus beef and the farmer doesn't actually, they can't monetize that investment until it's not only been, you know, grown and then taken and then, you know, butchered and then sold in the marketplace, and then eventually it comes back to, you know, and so that whole time they have to fund that investment. So they don't have liquid assets. Their business is very challenged, and sometimes they have to take on a lot of debt. My parents were both farmers, grew up on farms in Iowa, and, you know, the farming business was really, really hard because there wasn't liquidity to fund, you know, the whole growth process. They weren't paid on until the futures market really came in. So farmers today have to be futures market experts, and they have to invest and hedge on futures, or else, you know, a bad crop, whether it be plague or lotus or, you know, a dry spell comes in, farmers get wiped out. My grandfather got wiped out a couple of times from different things that came in. And so he didn't want my mom to be, you know, in the farming industry until my dad learned another trade before he could come back and work the family farm. So, you know, this allows us, in fact, last night I was just talking to some friends about really rare artifacts like guitars or art pieces. There's a company here in Dallas called Four Park that's working on over $1 billion portfolio of art, where, you know, it's great that you have it, but you can't monetize it. And banks don't lend against art because of the appraisal process and the risk factor I've got another colleague that has a Ghost, a 1926 Rolls Royce, and to get liquid assets, against that value, you have to almost sell it. But you don't want to sell it, but you have an asset that you want to be able to use and to leverage into other business transactions without tying up $1.6 million, right, in a car, or in an art piece, or in cattle in the case of Wyoming. It allows you to free up and get access and use that by selling fractional shares of whatever that is.
Interesting. I think we have some audience questions.
Yeah, absolutely. Yeah, exactly. Scott, we have a question from one of our guys here at Mearsoft, and one of our developers. His name is Jorge Reyes. Jorge asks, well, I'm just going to quote him. It's really easy to fall into the trap of the new shiny thing. How can I know if my business will truly benefit if I migrate to blockchain technology rather than stick to well-known technologies?
Yeah, I think there's a lot of really, really bad decisions being made in blockchain right now because they don't have a good business case. So, people are just sort of slapping blockchain on some project that they couldn't get funded before, and now it's blockchain so they can get funding for it. But you have to. Blockchain is only valuable if you're trying to secure data, or you're trying to transact business with multiple parties, right? So. And then the third one is really what we talked about on the NFTs, where you're trying to attach digital tokens to physical or digital items, so that you can create liquidity and things of that nature around it. So, so the short answer is that, if you're not trying to work like in supply chain with multiple vendors, and you need to create a trusted environment where we can transact business through smart contracts, and you're not trying to. I meet with startups all the time right now. In fact, I just met with 3 more this week, and next week is Dallas Startup Week, and I'll meet with another 50. And I always ask them 2 questions. One is, what is this solution saving money? So what money today is being spent that's going to go away if they invest in your blockchain solution? And then the second one is, if you're not going to save money, then how are you going to drive new revenue that's going to increase profitability for the business? If you can't answer those questions, then it's a bad use case or a bad startup. Because, a good friend of mine who's been, doing business for a long, long time always says, who's writing the check, right? And where's that budget coming from? Is it their operating budget? Is their growth budget? Is their business development budget? There has to be funds available for any business idea. Technology for technology's sake, way before blockchain, has always been a bad idea.
Thank you. Thank you so much. Thank you so much, Scott, for your answer. We have one more from the audience, from another one of our guys, another Jorge. We have many Jorges here in the company. Jorge Tobias. And Jorge is asking, what are your opinions on the reported high energy consumption to maintain a blockchain infrastructure, especially if it's a big one like Bitcoin?
Yeah, so Bitcoin mining is a fascinating topic. So, right now, some estimates say it's about 30 nuclear reactors worth of energy powering Bitcoin alone right now, right? And so proof of work, which is the consensus mechanism that Bitcoin and Ethereum currently are still focused on, do require, miners to do, an S9 ASICs machine right now does 14 trillion transactions a second. Right, so it's trying to solve a math problem that is increased in complexity so that each 10 minutes it's solved, right? So that requires an enormous amount of energy. And I think the long-term future of Bitcoin depends on whether or not proof of work is required to secure blockchains. So many the alt currencies are using alternative methods to proof of work, like proof of stake or notary type of solution. So there's several ways that they're securing their blockchains that don't require massive consumptions of energy. The other thing that's happening is that this technology around ASICs is rapidly advancing. So, the early machines could only do, 1 million transactions or a few 100 million transactions a second. And now we're at 14 trillion transactions a second. The next version is a third. Samsung's entering this marketplace right now and using their engineers, right, to build specialized chips that are able to do computations at 2 or 3 times as fast and for a third of the energy. So we got this typical race of technology advancement and energy consumption, but it's always going to be an equation. So we're looking in South America at standing up a massive mining co-location facility. And the reason why we chose Paraguay, because it's the largest hydroelectric dam in the world, 14 gigawatts produced annually. And it's a binational dam between Brazil and Paraguay. Well, Paraguay is 6.8 million people, and they have 7 gigawatts of energy coming out of the dam. They can't consume all that. They consume between 1.5 to 2.5 gigawatts, depending on the season, and they have an excess of 5 gigawatts of energy. They're the largest exporter of energy in the world. But by this 25-year treaty with Brazil, they have to sell it back to Brazil for a low cost. And so they renegotiate every few years, but it's coming up on the 25-year end of the treaty. And so they're about to enter a massive negotiation of who gets what energy. So we're looking at potentially, like other high energy companies like Caterpillar for their, their consumption of their liquid, metallurgy that they do to form their tractors, for instance, and the scoops and the teeth that go on the scoops. They need massive amounts of energy. In fact, a company here in Dallas called Hensley is part of Komatsu, and they're like the 3rd largest consumer of energy in the entire city of Dallas, and they have a fairly small footprint of 10 acres or so. But because they're using these arc welders, so it's long-winded answer, but the point is that there are spots like Canada that has access to geo energy, and Iceland has emerged as this huge cryptocurrency mining location because they have geothermal energy, 100 megawatts being produced there, which the whole island only used 80 megawatts to begin with. So it's really transforming and turning energy that's available in certain parts of the world that couldn't get to other parts of the world, and it's converting energy into coins that can now be transferred anywhere in the world. So it's becoming this sort of fascinating monetization of energy in places that was really expensive to transfer from to areas that have low energy. Now they can turn it into Bitcoin or other cryptocurrency, transfer it, and then essentially turn it back into energy through investments in manufacturing and other energy sources. So it's creating this whole of liquidity around energy in the world, as it turns out. But it really depends on what consensus mechanism wins in the end, right? Whether it's got to be proof of work or whether proof of stake or some of these other solutions prove out over the long term as being just as secure, then Bitcoin loses out. But I still think right now Bitcoin is going to be the dominant player for the short term.
So it's here to stay. It's not going to be a fast.
Cryptocurrency is here forever. It's going to become the government currency. You saw JPM coin recently get announced by JP Morgan Chase for their internal payment systems. That will continue.
Excellent. Thank you so much. Well, Scott, I think that we're coming up on time. So before I pass it on to Kim for wrap up, what I'd like to mention is simply just a quick announcement about next week for you and the audience as well, of course. Next week we're going to be chatting with Jade Brandeis, the CEO of Renge, which is a travel tech company, I believe. Right, Tulio? Am I correct?
No, it's social business networking.
Oh, right, exactly.
I'm actually interviewing her in person. We're going to be at the Expert Dojo, which is an incubator in Santa Monica.
Yeah.
It should be a lot of fun.
Exactly. It's a geofenced networking platform. That's what it's called.
And hopefully by then I'll have worked out my LinkedIn Live stream. I couldn't get it working today.
Yeah.
We have that activated, so hopefully we'll be both here and live on LinkedIn too. So
perfect. We'll look forward to that too, Leo. So that's next week. So stay tuned, folks, for next week. Same day, same hour, same time. And with that being said, the only thing left for me to do, Scott, is thank you so much. And I'll pass it on to Kim for wrap up. See you next time.
Yeah, thank you so much, Scott. Once again, Scott Mairs, CEO of Blockchain Business Solutions. Scott, I think you have a talent for taking what could be a very complex issue and making it something that's actually very well explained and easy to understand. So I appreciate that. Congratulations. And before we sign off, I just wanted to say, is there any final words of wisdom that you might have for our audience today?
Yeah, I'd say that, like you said, blockchain's here to stay. But it's really important to think about what the real business case is, and really look at, whether you're saving money with the solution, which billions and trillions actually will be saved over the next, 10 years with the implementation of blockchain. But make sure it makes sense. It's going to save you money, or it's going to drive incremental revenue, or else, it's probably not a good decision. And really work with partners that know what they're doing, because there's, like any new technology, there are a lot of ways that things can go wrong, especially when you're talking about payment systems and wallets and exchanges. There's lots of exposure there if you're not working with the right partners.
Excellent. Thank you. Words of wisdom. And if our listeners and viewers want to reach out to you, Scott, or know more, how can they get a hold of you?
Yeah, I'm on LinkedIn, Scott Mairs. You can also just email me at scott@blockchainbusinesssolutions.io, and welcome any conversations. And hopefully I'll see some of you at Startup Week next week here in Dallas.
Perfect. And that's Mairs, M-A-I-R-S, not mayor as in the governmental figure of a city, right? M-A-I-R-S.
Lots of ways to
Yeah,
spell it.
We'll have your contact info on your landing page here in dojo.live too. So
it's all going to be in there. So worry not. Yeah, exactly. I was going to say for the audience.
For those rushing to write it down, you'll have a click.
Great. Well, thanks for having me on. This is a great show, and honored to be a part of your panels and discussion.
Thank you so much.
Thank you.
Talk to you soon.
Have a good rest of the day, everyone.
You too, Kim.